Hey all, Mike back here, and today we're going to be talking about the top stocks you should look at if you want to consider retiring early. And just a quick disclosure, this is not legal, tax, or financial advice. You should make sure you do your own research before investing in anything. I am not a financial advisor. And before we get started, make sure you comment down below. Let me know what your strategy is for retiring early. Is it saving a lot of money? Is it dividend stocks? Is it real estate? Is it high growth, high yield stocks? Let me know down below what you are investing in right now. And with that, let's get right into it. Before we begin looking at individual stocks, we should actually take a step back and look at what the right strategy is. If you're young like me, it's actually high risk, high reward stocks. I'm not going to retire for a long time, so I can easily make up those losses. So it's worth it for me to take big swings and try to make a lot of money with high risk, high reward stocks. However, if you're older like my parents, you probably don't want to take these high risk, high reward stocks. You probably want to take a more conservative approach with more stable, maybe high dividend growth stocks that don't fluctuate too much. Specifically in this video, we're going to be taking a look at these high risk, high reward stocks that are targeted towards millennials like me who want to take big swings and potentially retire early. And for this high risk, high reward strategy that could help us potentially retire early, we're going to be looking at companies that fall under two different buckets. Number one, we're going to be looking at small companies that have a lot of opportunity to grow in an already large market. And number two, we're going to be looking for companies that already have a large market share in a market that's growing very, very fast. And with that, let's dive right into our top companies. So first up, we have Square, which is both a small company that is going to grow large, and it has a decent market share in an overall market that is growing really fast, which is online banking. So we mostly know Square as the company that offers the point of sale systems, but actually a lot of their stock growth is through their Square Cash app. And so if you really believe that the future of finance is online via apps, via mobile banking, then Square is definitely the right stock for us. Square is best poised to capture a lot of this growth with their Square Cash app, which has over 30 million users and is only growing really, really fast. And with these 30 million Square Cash users, Square can easily leverage them for other types of sources of revenue, from mobile banking to potentially credit cards. I know they have crypto right now, to other types of peer-to-peer payments and even integrations with their point of sale systems. I really see Square and Square Cash potentially being a platform for the future of mobile payments. And for that, I really see them growing a lot. Next up is American Tower Corp, AMT. And I think they already have a large market share of different types of cell towers, but with 5G, I think it's going to grow the overall market and AMT has a lot of room to grow. So I really think this bet is on the bet of 5G as the future, and 5G is the future in terms of speed. However, there is one downside to 5G, which is the cell towers have a limited range. And what that means is you're going to need more cell towers to have the same amount of coverage. And what AMT provides is they provide the land and the cell tower leases to companies like Verizon and AT&T and T-Mobile. And so if we really believe that 5G is the future, you will need more 5G cell towers to have the same coverage, which just means more leases for AMT, which means more revenue, which means more money for AMT. And we can see right now they have a CAGR, so a compounded annual growth rate of about 12%. And this is even before 5G. So I can really see this going up all the way to 20%. Next up, we have SHOP, which I really think is a small player in the overall e-commerce space. And I'll tell you why. And right now, e-commerce is the fastest growing segment. In 2020, they've grown over 44% compared to 2019. Obviously, a lot of this is due to the pandemic, but I think this is just an inevitable trend. The interesting thing is direct to consumer, especially influencer brands, only take up about 2.6% of that market. And Shopify is the biggest player when it comes to D2C websites and especially influencer-led brands. I personally think the future is D2C and influencer and creator-led brands, and I think Shopify is in the best position to take up a lot of that market share. I really see a lot of these D2C brands and influencer-led brands taking up more than just 2.6% of the market in the near future. We know that Amazon and Walmart are taking up a lot of this market share, but I think a lot of this will be driven by apparel, by merchandising from these D2C and from these influencer-led brands. And for that reason, I think Shopify is a strong growth company. Next up, we have Amazon. This is a classic, this is well known, but I think it's for slightly different reasons. I would actually say a lot of their growth is due to AWS and not due to e-commerce. I would say they're right now a big player in the cloud computing space, and the cloud computing space is only going to grow super fast in the next few years. Right now, the cloud growth is about 17.5% CAGR, which is again compounded annual growth rate, which is huge. And right now, Amazon owns about 33% of the overall market. And so with this growth rate for the overall cloud computing industry, we can see Amazon is poised to capture a lot of that growth. And then last up, we have a relatively unknown ticker, which is actually not a company. It's MCHI, and this is an overall tracker for China's economy. And the main reason why I'm recommending this is because China is overall growing really, really fast. Actually, the IMF is projecting China to grow at over 6% annually, and right now, they're only projecting US to grow at about less than 2% annually. So for those reasons, I think China is poised for huge growth, and I don't really know which company to pick out of these, probably some of the tech companies. But I think what MCHI does a really good job is it covers a lot of the China industry, so it captures a lot of that growth. And with that, that wraps up my top stocks that I'd recommend if we want to retire early. Just a quick reminder, these are high risk, but also high reward stocks, so proceed with caution. And remember, before you do any investing, make sure you understand the product strategy, make sure you understand the stock strategy, and make sure you make a lot of money. See you guys.